Everyone, how's it going? Good. That's the end. That's the closing bell for today. Um, I'm feeling a little under the weather, so I apologize if I'm not as energetic or enthusiastic as normal. But we'll get through this and uh, get some good uh, analysis and trades going. So let me share my screen. And the S&P 500, it started out strong, moving upwards, and then we traded down, and then we recovered some during the last hour or so of the market. So what we see here is that we are trading very technically. We didn't quite hit that MA50, but we did pull back, and our EMA 8 and our EMA 20 actually ended up holding. So from here, my personal feeling is that the market is still very strong. It's very resilient. Like, even though we traded down, we got buyers coming back in and pulled this up, not quite as high as we might normally like to see, but they did come back in and start defending these moving averages. So likely we are going to either chop sideways and the gap between the MA50 and the MA20 will narrow, and then we'll have to decide if it's going to go down or up. But given the strength of the market, given all the buyers who are coming in, given that we still see the buyers despite bad news, my personal feeling is that we have a higher chance of moving up through that MA50. So tomorrow we might come up and brush against it again. Uh, if the market is super strong, then we'll break right through it. But I believe we'll have a net up day and at least test that MA50 tomorrow. Tomorrow is Friday. Could happen on Monday. But it's pretty high likelihood that we're gonna go and test that MA50. So let's take a look how it looked intraday. Okay, that's not. I'm on a different computer than normal, so uh, some things are giving me a little bit of trouble here. So you see that we started trading down and then we trended up and then something happened over here. There was no clear news that I could find, but this happened over a stretch of time, the the initial downward motion. And initially you can see that there's not really, other than this bar right here, it's not like we had large bars except for these three in a row. This is mostly muted, so it wasn't a downward motion on huge volatility. But and the fact that it is spread out across a period of time shows me that it is less likely to be news. It's just maybe some people have decided to start taking profits, and we traded down quite a bit before bouncing, and buyers came back into the close. So even though it's a down day, the fact that we got buyers twice like, coming back into the market is very optimistic. Yeah. So I didn't record the session this morning, or I didn't have the session this morning, so we didn't have any day trades to look at. So let's take a look at some of the trades that we've been tracking over here. Uh, So two of them are closed. Okay, so I ended up closing the the two earnings trades that we've gone over so far. So we have the earnings. Is this the right one? No, that's not the right one. Google, wrong Google. Um, let's sort by symbol. So this, I put this one back in, and then this morning we wanted to uh, take the profits on that particular trade, even though there's technically another week before Google announces earnings, but you can see that it already made 27%. And I wish I could, let's see, reactivate this. Reactivate this. Well, I'll figure out how to reactivate this at maybe and show you maybe tomorrow. But if you recall the equity curve was a spike, not a spike, a sort of like a triangle, okay, except it was curved triangle. And this price, 138 or 140, the we were towards the upper end of that equity curve. So with the market being strong, the idea of this type of earnings trade was that the that we would be very steady and maybe go sideways into earnings. But that didn't happen with Google because Google's in the communications sector, and that has been pretty strong over the last week. The whole sector caught quite a bit over this past week. So that pushed price to the far end of the equity curve. And if we kept on going higher, then we could risk losing money. So while we had decent profits, I just decided to close the trade. Okay. And then we have the earnings trade that I showed you yesterday, which was Delta Airlines. And the way that we structured that trade was that if Delta Airlines, as long as it stayed below this purple line right here, we would make uh, we would make money. And it not only did it stay below it, it was pretty significantly below it, or at least it traded down pretty significantly below it. And so we reached our lower end of our profit graph, which is guaranteed, a minimum amount, or what I call the expected return. And so we got the expected return. So that was great. I actually traded out a little bit. You can see this one, right? Got the very close to the expected return, and this one got the complete expected return. This is the one that I showed you guys yesterday in the video. So we were able to realize the entire profit, which is great. It's not 100% return. It's 100% of the profit, available profit to it. So if I remember correctly, it's maybe like 12%, or 17 or 18%. I think that one was. So that's very quick trade. It's overnight. We're able to realize the profits overnight, and so that's why it's my favorite way to trade earnings. So today, let's take a look at what sectors are doing really well. And so since the event, or since last weekend, we can see that energies and SMH are dominating. XLRE is very close, and so is XLU. And the main theme that I want to pay attention to is SMH. SMH has just been really strong throughout. It was strong in May to August, and then it's been outperforming on this bounce up. So SMH is where we're starting to see a lot of money managers show interest and show their hand. So for today's trade of the day, I'm going to look at SMH. Let's take a look at the chart. So you can see that on this wave up, it's been very strong. It hit the EMA 20, came back a little bit, made a higher low, and then it went straight through that MA 50. So we have 2 full days above the MA 50, and that's very strong, very positive. It is somewhat parabolic right now, so we may pull back before going higher, or we may continue to go up. Those are the two higher probability scenarios. Of course, we could always come down, but low probability of that. The highest probability is actually a pullback into the MA50 and then going up. But if this has a lot of strength and money managers keep moving money into it, then this will just keep on moving straight up. So I am going to do a call, but I'm not going to do it at the money. I'm actually going to look to do this a little bit longer term because I don't know about if this is going to pull back or if it's going to keep going higher. But my expectation is that it's going to come up and challenge the the previous highs right here, and maybe even go beyond that. So I want to be able to capture that if that happens over the next 1 to 3 months. So the way I'm going to do that is uh, we don't have a December yet. No, this is the wrong symbol. So we do have a December. So I'm going to do is what I call a 1% extrinsic value trade. So meaning that whatever the price is right now, if I take 1% of that, which is $1.52, I don't want to pay any more than that in extrinsic value. So whatever the strike is versus its price, if I add the strike to its price, so there's a 140 call strike. If I add the price, which is $16.03, then I get 156.03. And 156.03 minus 152.17 is almost $4, right? So that's too much. I only want to pay $1.50. So $1.50 from here would be 153 point, just call it 7. So I'm going to move this up until I approach 153.7. So this is going to be 155 handle. So this is going to be 159. So I'm moving in the wrong direction. So this is going to be 155. This will be 155. This will be 153.9. So this is really close. And this will be 153.6. So I either want to choose 115 or 120 as my call. And this is just personal preference between these two because they're both close enough. And how much do you want to invest in a single trade? So obviously, not every portfolio can do this because this is quite a large amount. But we're doing this as assumed trades just to learn and to practice. So I'm going to do the 120. So I'm going to save this. This is the after market. And this is a 1% extrinsic value trade off of strongest sector. Okay. So no matter what the market is doing, this is just another way of finding opportunity, looking where trading your expectation, but realizing that you could be wrong. And when you realize that you could be wrong, then you're going to take measures to manage your risk. So in this particular trade, I don't want it to go to zero. Right? So unlike the ones I've been talking about earlier this week, I'm taking a much longer time frame. It's a few months, right? Rather than a few days or 1 or 2 weeks. So when I'm managing this risk right here, I'm not going to let it go to zero. I am only going to allow 20 to 30% loss. So if we're wrong and SMH pulls back and pulls down through that MA50, I'm going to be watching very carefully. And anytime I land between 20 and 30% loss, then I'm just going to close the trade, right? So it's much better to suffer a smaller loss because it's much easier to make up for it in future trades. Or I can even, even if it comes down and at some point bounces, I can re-enter that trade as long as my long-term view of SMH is, I shouldn't say long-term, or my 2 to 3 month view of SMH remains the same, then I could get in at an even cheaper price and that'll make up for any loss that I take. So instead of waiting for my position to lose like 50 or 60% and bouncing back and breaking even, I will lose only 20 or 30% and then re-enter when it bounces back up. And so I'll spare myself well, I'll add 20 to 30 or 40% gain on my position by doing that way, rather than staying in it the entire time. Okay. So that is it for today. I'm keeping it a little bit short because I'm still not feeling that well. So, I will, if you have any questions, let me know. Still be more than happy to answer them. Otherwise, have a great afternoon and I will see you guys tomorrow.